So I think from a flex point of view, it's become such a such a meaningful topic for discussion these days. A lot of discussions happening on every side of the table. So just setting up the stage, just setting up the stage, talking about the whole concept, where the models are, what is happening, and then I'm going to open up the questions to my fellow panelists. Flexible workspaces have always been on periphery of every real estate decision making. From the business centers of yesteryears, I know it was like long, long ago, to what it has evolved into, from co-working, going now into enterprise and managed solutions model that we see a lot happening in the industry today. In the other international markets, flexible solutions or managed solutions are basically rolling short-term contracts. It could be for a period of a single day or a week or a month. However, in India, the whole concept is very different. Managed workspaces are being offered more or less now as a la carte solution. So clients have got an option to pick and choose what kind of service they want, which part of the pie that they would request the third-party provider to service them, and so that it is related to and in consonance with the business that they are running. I think that's become the key driver for these models. The models have, if I look at it, been segmented by demand coming from three segments, and I'm sure my fellow panelists will agree. The three segments being the GCCs and other new entrants coming into the country. So they are coming in without any baggage. They don't know the plans, what's going to happen. So they need some support and solution. The second category is the small and mid-sized companies who have got aspirations of being in larger facilities, larger tech parks, larger business parks, but do not have the space availability or the bandwidth to go stretch beyond what they can. And the last segment is probably the large organizations who are right now, navigating the ambiguous world, which is so dynamic in terms of what is going to be hybrid, what is the return to office, where the future of real estate is going to go. I think there was a lot discussed in the previous segment on the statistics and where things are, but the managed industry is really growing by leaps and bounds. The three drivers, in addition to what I just mentioned, is basically being a cost-effective solution, a single point source of solution, and the third is providing an adaptable environment which keeps up with the dynamic nature of the business as well. From a demand point of view, we've seen a 5x growth in the last 5 years. Currently sitting at space absorption at about 50 million square feet across the top 8 cities. And that's expected to grow to 75 million square feet in the next 3 years. So the pace of growth has certainly increased. 2022 saw about 100,000 seats absorbed by occupiers on the flex side. And this, interestingly, and as Arpit was also mentioning, is about 67-68% of that is already seen in the first half of 2023. So I think we're going to break the records for last year as well. This is all coming from the agility of the industry to respond to the demand, to the varied demand that the occupiers are coming with today. Having said that, I'm just going to jump into questions. My first question directed to Neetish and to Kunal. What are some of the recent trends that you have observed in the industry, and what innovative business models or strategies have been utilized to cater to these evolving needs of the customers?
Sure, I can start. First of all, thank you to Business World for having us here. I think the industry has significantly evolved, at least in the last 4 or 5 quarters. We've seen a significant change in the demand and type of demand that is coming. Earlier, when I started this about 5-6 years back, we were working on a transaction level basis, right? Most of the deals that used to come, we used to talk about, okay, a client wants 100 seats, 200 seats in a particular location. I think what has significantly changed in the last couple of quarters is the fact now everyone's talking about portfolio changes. When we talk to a company now, they're not coming in saying that I want 100 seats. They're coming and saying, I have 6,000 people sitting out of 17 offices across the country. How can I move them into flexible workspaces spread across different cities? So I think just in terms of how people are perceiving flex space, and flex space is a very broad term. As you rightly said, there are multiple divisions to it. I think there is a co-working environment, there's a managed office environment, and then there is other evolving environments which are yet to figure out where they really fit in. For us, the biggest differentiator has been the fact that most of the clients that come to us are expanding with us in multiple locations. That's one of the reasons that now we're present in 14 cities across the country, where it's not us going into those cities with just speculatively, right? It's basically our customers coming and saying, I want to shift my portfolio to flex, at least a certain portion with the larger corporates, but most of the mid-segment corporates, they're saying, I don't want to have the hassle of running my offices. I think that's been one of the biggest drivers of the industry. And I think in terms of trend, if we see this kind of adoption going up, you will see flex spaces not just take a bigger portion of the entire supply, but even create more innovative models with our models like campuses coming into place, taking much larger spaces, creating and focusing more on experiences. If you look at the evolution of offices also, it's not like people started making tech parks first, right? It started with individual buildings, then evolved into tech parks. I think co-working will also go through the same journey where we are done with the individual buildings. Now we've started focusing towards tech parks where you're creating an integrated service, an integrated experience. So I think going forward, that's how strategies with everyone would change.
I think you were curious more about the kind of trends that we're seeing. I think the account level aspect is more relationship. As you get more important for the client obviously wants a strategy. They don't want a specific transaction solution. But more importantly, I think this emphasis towards return to office has driven a design decision-making process to be fairly extensive today. That didn't used to be the case even 3 years back or even 2 years back. But definitely this year, there's a significant amount of pressure at the CXO level to bring people and employees back to office. I know the previous panel, somebody spoke about how for smaller organizations, work from home is actually a better solution. We see it the other way around. We think the larger corporates and the small size corporates, today everybody is desperate. There is stakeholder pressure from shareholders, from board members, from the leadership sitting in India as well as outside India, whether it's GCC or MNC businesses or India-led large MNCs. Everybody wants to be back in office. A large part of that is going towards your CRE heads getting more and more involved with design, asking for not just more amenities, but more ergonomic designs, more emphasis on green spaces, more emphasis on campuses or locations that cater to a social environment as well. I'll just give you an example. I was in BKC yesterday for a couple of meetings, and I was catching up with somebody for dinner. It was almost impossible on a Wednesday night to get a table in BKC, right? BKC is not a residential catchment at all. I don't know what people are doing post 8 p.m., but clearly they're all sitting down in offices and supposedly doing business meetings. There's a lot more emphasis towards integrated IT parks, like Neetish also mentioned, being a core focus and a core requirement for a lot of corporates. Irrespective of where they're looking at, which city they're looking at more experiential offerings. They're looking at a hospitality as a significant wrapper around the core real estate offering. So that's largely one of the large trends that we are seeing, which is getting more and more consolidated. It does mean at our level that it's taking us longer to conclude the transactions and go live, but it's something which is becoming a more sticky point for most corporates.
I think, like you rightly said, the occupancies that we are seeing in flex locations is much, much higher there than what we are seeing in single tenant campuses. And that's, I think, if I take from what you're saying, it's not the size of the organization, it's more, I think, who's driving the decision to come back to work. So thanks for that. Ekta, from your point of view, over the years, we have seen a change in the mindset of the CRE leadership towards flex spaces, right? What are the key drivers that you keep hearing from your clients that have an impact on decision-making towards this and, thus structuring the way the trends and the models are moving?
Right, thanks for that, Ramita. Well, first of all, this industry has grown a lot, as you were mentioning. The 50 million square feet mark that we've reached and how else to go ahead. There's been a substantial amount of evolution and growth in how this industry has unfolded and grown. Few of the key drivers, at least in the last few years, what to do, what is going to happen next. That has been a very important key driver for the sector to do well, and that's really been and we've seen the last two to 3 years, it was not just about a short-term requirement. It moved to a medium-term requirement to say that this will resolve my problem for the next 2-3 years, and then I'll see what to do next. The good thing is that in this evolution, we also saw a large amount of enterprise seats, which is 500 plus seats, and that has kind of forced them to think about this as a core CRE, core real estate strategy, and not just a quick fix. So if you're asking me what are the drivers, the obvious drivers, apart from these, are the fact that the spaces give the flexibility to flex up, flex down, no capex, and the turnaround time for fit-outs is nearly half of what they would have. Your capex to opex model, flexibility in the entire lease, and the fact that employees come back to space which is more agile, which gives so that's the evolution of co-working to the more managed and service spaces, right? So that is the trend we're seeing. But now the real question, the million-dollar question that everybody wants to know is, because employees are coming back, I see the CRE folks being much more confident now, and I agree with what Kunal was saying, that it's mandated now, and I can see most of the offices. And all of us in this room, right? Now, when we kind of see, we go out, we meet more people, offices are fuller. And it's great to actually, have a conclave like this where you're seeing faces. So things are evolving and changing. And now I feel there's going to be next evolution where it's not only going to be a quick fix or just these short-term arrangements. And I'm sure that will unfold in your next questions. But I do want to share that back in 2009, I remember I was reading a report which said this is a 6 million square feet market, and by 2021, it's going to be a 20 million square feet market. So look at where we've reached. We were all wrong. We are already a 50 million square feet. So firstly, kudos to all of us. I think we've done a great job, and I personally underestimated to where this industry could be. So that's, I think, a great trigger point. But what next is probably where we should all focus and think, and I'm sure that'll be in the next questions that are following. So thank you.
Pulkit, I'd love to hear your views on it as well.
Thanks, Ramita, and good afternoon, everyone. Morning, sorry. Ekta's covered it well, but I think a couple of other things, right? All these CRE heads and all of these organizations have got very environmentally conscious, quite responsible. Everybody wants to become carbon neutral. So I think, yes, they prefer LEED platinum buildings or rated buildings for that matter. And operators who are acquiring those kind of assets or are having their landlords develop the assets, and get those certifications are slightly having an edge. I think after sales is a very big thing. It's not just CRE heads don't want to buy space. Now they're signing up for 3 years, 5 years with many of our operator partners in this room today. And when you're having that longer relationship, there's always issues. There's operations, fit out, refurbishments. So is the after sales good? I also think because you're taking such a long commitment, and a lot of companies, and CBRE, Cushman, we've all done that. A lot of companies have practically built HQs on the city or country level in many flex spaces now. So to be able to do that kind of spec, do they have the financial capability? So I think now more and more large occupiers are beginning to look at books of the operators before they sign up a document. I think leadership quality makes a lot of, the profile of the founders or leaders makes a lot of difference now, because that's who you're dealing with. Tech enablement is not just a word anymore. You actually have to have the real, is it just an app where I talk to social members on the community? Or is it somewhere where I can really can I book my parking through this app? Can I book my food? I was with Neetish the other day in Bangalore, and I went through the Smartworks app. There's just a whole number of new things I've never seen an app do in a center, right? So that's another thing. And I think it's also not just we'll do customized fit outs, right? First of all, the quality of fit outs, can you do them as well as those people could have done it themselves? Second thing is, can you maintain them as well? And now, to what extent can customization go? Can I also customize service levels? Can I also pick the vendors that are doing the fit outs or the FM in my facility? And more than that, right, all of this cannot come for free or at a cheap price. So is there financial feasibility in being able to do this? So I think all of these things, coupled with what Ekta said, are, I think, maybe at the top of the mind of any CRE head choosing Flex now.
Yeah, and just to add, I think if you go to pre-COVID levels, globally there was this discussion happening all across, even with the larger occupiers, that about 10 to 15% of the portfolio needs to be flexible, to address the market dynamics. Of course, COVID kind of, I wouldn't say put a halt, I would say it put a pause to it. And I guess now it's all coming back and pushing us in that direction. So thanks for that. Sanjay, next question to you. Hybrid work models are becoming more prevalent, right? Everybody's talking about work from office plus work from home. So basically, how can the flexible space providers partner with occupiers to give that solution where, you have got dual working both at office and remote?
Morning, everyone. So I think, Ramita, this is a very important question. Before I even answer that, I think we need to really understand, what are the concerns of these large occupiers and corporates. And especially after COVID, one of the largest concerns that I see is that most of these corporates are sitting on a lot of excess space, purely because of these models coming in, work from home, you call it, hybrid or hub and spoke, or whatever models you call it. Right? The spaces in the metros and the HQs have really gone down, so the utilization is not more than 40 to 50% in most of the cases. And the issue and the concern with these corporates is that they cannot get rid of these spaces purely because of multiple reasons. Maybe they're logged in, they've done investments in the capex, or some business reasons. So we've really just, in fact, a lot of operators have really partnered with these large occupiers to give them an exit and get other clients in, and which really helps them to sort of save a lot of capital which they've invested or they were supposed to spend in terms of the lease. So that's one. Now the second is with these new models coming in and the employers just sort of just branching out in different cities, the major issue that's coming in for the last couple of years is that there's a lack of availability of good grade A stock and new upcoming supply in these tier 2, tier 3 markets. What we've done actually, we've gone forward and we've been now collaborating with the local developers, with the investors in these cities, and giving them more confidence that, look, we'll absorb the space, there's a lot of demand. And I saw a lot of comments here, people saying that probably next, few years, this space is going to take up 70-80%. So yeah, that's the confidence that we're giving these developers as well. So that's extremely important. That's apart from that, obviously there was a lot of discussion on tech. So there's lots happening with these large occupiers, corporates, where we're partnering with them and trying to solve their pain points.
That's an interesting concept, right, of the corporates wanting to downsize and how the flex players are coming forward to partner on that. Any views from a demand side that we could look at, Pulkit, on the partnerships?
Could you enhance that question?
The same hybrid working. We've looked at one side of the story, which is on the excess supply, which is available with corporates getting, partnering with flex players to kind of look at an exit. But is there any from a demand side, as in when there is a demand or looking for space, how soon or how quickly can that demand be addressed? Is there any partnership that you're seeing as a response from the flex side?
Yeah, so from I feel, first of all, I think we're in a demand overflow when it comes to flex. I don't think we have remotely, nearly close amount of relevant supply to be able to cater to it. But we are in dearth of, even more than that, we're in dearth of a good networked operator, right? So there's very few operators who have 50 plus centers in the country. And the problem is, even if you have a lot of centers across the country, most of these operators have their centers full. So how do you even cater to that on-demand solutions? So I think a lot of clients are coming because that is the real flexibility. Just doing fit-outs or providing, those kind of solutions is not flexibility. Flexibility is, can I walk into the space and walk out whenever I want? Can I come to my office or the co-working space whenever I want? Can I access this in Nasik or in New Delhi whenever I want, right? And can I get the consistency of experiences and price? And can we do this in a single contract? And can all of my employees do this? Now, of course, people like, and it's a lot on aggregators like, Paras, there's Utkarsh here, to be able to solve for that. And they're trying their best. Not operators alone can solve for this because there's only as many locations they can open at any point of time. But what I'm seeing also how operators are sort of responding to it, some of them are partnering now with other operators, right? So they're developing the app where you can book all of these on-demand solutions, which can provide a consistency of experience, a single profile, but you can go to their center or you could go to their partner center. For you, life should be almost just the same like Oyo did, right? So a lot of them are uploading their availability and their centers on various aggregators that we have in the room. So, and if you have that aggregators app, you can go and book through that. But, I think the tech in this space has to evolve still a long way right now to be able to respond to it properly. And then there's usage tracking, right? So a lot of them are able to give this on-demand solution, which helps customers track. So I was working on a requirement some time back, and we use this on-demand solution thing to solve for a different problem, right? So they were working in a large city and they didn't know how many offices to take and where exactly to take because their employees were spread over. And we said, why don't we go with an operator who has this centers across the city, and let's take an on-demand solution from them and give your employees choice to go anywhere. Whoever lives wherever can go anywhere in the city. And give it 6 months, see if there's a pattern. See if they're all given a choice to go anywhere. Do they still tend to go to, if they go to office at all, do they still tend to go to a specific location or two sets of locations and see how many go where? After 6 to 8 months, you'll at least narrow down to 2-3 locations. And after that, maybe there is where, with that operator or otherwise on your own, you can have a long-term office. So I think that's some sense on the demand side, if that answers.
Yes, it does. Thank you so much. I'm actually going to go back to Neetish and Kunal on this one. And I think we heard that in the previous panel as well. There is a lot of focus coming from occupiers on sustainability, on wellness, and the overall client experience, employee experience, especially with wanting to call employees back into offices. So how are you seeing that evolve from asks that are coming to you, and how are you responding to those asks?
No, I think, experience in generally, sustainability is just a small part of the entire experience. And I think post-COVID, people have become more demanding. What COVID had really done is people were staying at home, there was convenience which was there. And if these large corporates want to call their employees back, they have to provide a lot more amenities in the facilities. They have to create a more engaging environment for the employees to come back to work. They have to provide things like food, transportation. All of those are the usage of that has gone up significantly in the last since people have started coming back to work. So while sustainability obviously has not been a thing which has started right now, I think larger corporates have been focusing on sustainability for some time now, and we are seeing a shift in which even the smaller requirements have started now focusing towards sustainability. And with us, people like Kunal and me who are focusing on just the building and the office experience of those employees, we can provide these services at a much larger level because we have the ability of doing it for a large space. We have the ability of doing it across multiple locations. So I think that's an add-on which definitely attracts a lot of large enterprises today. But I think experience in general right now is still being defined, right? What is the new office experience is still a work in progress. There are certain elements which have already come out, but I think the more evolved version is going to come up over the next few quarters, where you will see people, the new age, us millennials, demanding much, much more from our office space than just a workstation and desk. Those days are gone when you were just focusing, give us a desk, give us this workstation, and I don't want anything else in our office space. Now people want everything. You want the gyms, you want the sports zones, you want the arcades also. and it needs to continuously evolve, right? It can't be something that I've made today and I hope it's going to stick on for the next 15 years. It's going to be something that I've made today, and then I take that feedback from the employees of the customers, and then create a product which focuses, on the larger experience. But going forward, I think there is a lot of evolution which is still going to happen.
I'll try and kind of bifurcate this into two, right? The first is sustainability, and let's get it out of the way. I think that's been the theme that's become now a cacophony, in the sense it's a demand, it's a requirement of the RFP. Your building's not going to get selected. Every listed developer is forced to add amenities to change their building designs to be more environmental friendly and all of that. Over the last 2 years, we've seen clients come in with RFPs saying, even the interior designs that you're doing needs to be certified to be green, this, that, the other. We went through those guidelines, and we realized how futile they are for a country like India. You have decision-making being based out of London, of Copenhagen, of Singapore, but it's definitely not Indian, because one of the key requirements is you're going to source about 80% of what are you going to utilize in the office from a 50-kilometer radius, right? Now, welcome to Calcutta, because there is no manufacturing, right? Or Bangalore, for that matter, where the client's saying, hey, you know what, I want Herman Miller, that's coming from Hong Kong, that's coming from Malaysia. So I'm not really sure what they're trying to achieve there, except probably something really nice and visual on the annual reports. And I take the blame for it, because when we came up with these indexes, right, out of 100 that you rate companies, and there are corporate governance norms, that you rate companies and businesses on what's your green score. Tesla was at 37. Guess what Saudi Aramco's at? It's at 80. So it's a joke, right? Similar to when we talk about customer experience that we're offering in these centers. We had a good discussion with the GCC that's coming into India, doing about 1,000 seats with us. It's everything from ground up. We've helped them with incorporation. We've helped them with their banking accounts. We've helped them navigate how you set up the business in India, which is where I think Flex is headed, by the way. From ground up, we've been hand-holding them. It's more of a consulting approach for us. It's more of look at us as outsourced office partners. To give you a parallel, any large MNC in India, which is upwards of 10,000 people, has at least 70,000 people which are outsourced vendors. That's going to be the ratio for office space in India for a lot of these GCCs as well. It's not going to be 20% of their office which is going to be outsourced. It's going to be 70% of the office that's going to be outsourced in the next 15, 20, 25 years. It's just we have to look far enough. Similar to how we talk about customer experience, right? And this gentleman asked me, he said, look, the design is really important for us. We do have a lot of attrition. We want to make sure there are amenities provided and all of that. And I said, hey, let's be clear. There is only an extent to which I can help you with attrition. Only an extent to which where you can say, hey, not just a workstation, but free coffee, free this, that, everything else put together. Ultimately, it's the work and the compensation. This is a country which is extremely hungry. You have a younger population today, and every bank has reported the recent results in the quarter. If you notice one pattern, we're talking about 38% attrition. About 80% attrition is at the junior level, right? Which is people which are in the first 5 years of their work profile. They will jump. You can't compensate that by providing an amenity here and there. The amenity aspect is what is now table stakes. If you don't have those amenities, if you don't do those offices, if you don't do the designs well, if you don't have your green credentials, you're not even going to be shortlisted. Forget about anything else. But what are we achieving with them? What we are achieving is we are escalating the base case for what an office in India looks like. That's something that's been missing for a very long period of time. I mean, going back to what Neetish said, I completely agree with him. Even 8-10 years back, when maybe a lot of us in this room would have started our journeys in the mid-career, we were just taken for granted that this is the office space, nobody consults, nothing happens. Today, the design process itself is not being led by the CRE. It's being shepherded by the CRE. You will not have CFO decide where the office is going to go. It is a very broad-based consultative approach, which essentially means it takes longer, but you are seeing a lot better offices and a lot better amenities coming out of that.
And I think that's what we're seeing on ground as well. And a lot of evolution has gone towards improving all of those things rather than just looking at how we can slice and dice the model and then put it back together. Ekta, to you, we've spoken about remote working and we've spoken about hybrid. What do you see the future holds for this industry, the flex industry, given all of these other parameters that are working towards it?
So Ramita, we spoke about where we've reached so far. It's been phenomenal. Where next? I lot of points from what Kunal had to say, Neetish had to say. Yes, there has been a lot of changes on how everyone's looking at this space, but the center of decision is coming from employees, people. So right now, whichever way I'm looking at things moving, I'm realizing it is actually the employees who are dictating the next course of action for real estate in most of the companies. Good part, a lot of people are back in office. We've already had a lot of corporates experience flex space, and that's fantastic. So the entire thought of, will you pay that extra buck to be in a fully managed space is gone out of the window. They understand that there is a reason why this has to be paid. While this is where we are, 2-3 things I feel are going to be extremely important for us to continue with the growth. First one being, I'm seeing more and more clients who are willing to pay premium price to get premium experiences. And I know after this, Neetish, Kunal, Sanjay, they're all going to ask me, where are these clients? Who is willing to pay more? But there are clients who are saying, give me that experience which will help me get my employees back. Stick around, help me hold the attrition rates. Do we have a clear answer to that? No. But it is something you're going to talk with your customer, with your occupiers, and figure out how to really get there. But I can clearly tell you there are more than enough occupiers who are saying, give me that experience, and if I have to pay that extra buck, I will. So that's one part. Second part, I feel the location that most of the players choose moving forward. So the strategic locations are going to play a very, very, very important role. Are you near to home? Will you get your employees back? In whichever cities we look at, there are 3-4 micro markets where we know you will have the growth. So as long as you're part of that growth corridor, I feel you will have more to do within the space. Third clear differentiator is, while flex has become part of core real estate decision making, they want to own that flex. Occupiers want to have complete control over that flexible spaces that they have decided to have. And for that, technology becomes very important. To what Pulkit was saying, that can I actually give my people within that flex space exactly the same experience that they would have anywhere across the world? So that becomes a very important part. So for me, these 3-4 focus points are very important to to think where next and what is it that's going to happen next. I feel one of the important factors to consider is the partnership or relationship with developers, right? Because a grade A real estate that you need from grade A developers, the minute they start looking at this industry as complementing and not competing, I feel there will be a huge shift in the partnership again. Because if those spaces are not available, what are we going to do? And right now, I see that as a very big threat. I do see that as a very big challenge, and there are ways to address that. There are ways to figure this out, because without the space, we may have 100 ideas on how we want to make it work. But if we don't have the space, what are we going to do? Unless we all start building ourselves, right? So just to conclude this, yes, there's a clear shift in the way occupiers are thinking from tactically looking at the space as a tactical solution. It's become a strategic solution, and I think it's here to last. It's here to last. So yeah.
Sanjay, any thoughts?
Yeah, I'll just add to what she said. I think across the board today, it's very clear everybody needs flexibility, right? So flexibility and agility is what everybody wants, and this space is here to stay, right? As long as we can continue to solve the problems that these clients are facing, whether, as Kunal said, it's design related, whether it's space related. There's been a lot of breach. There's a lot of discussion happening on data privacy, on taking the security measures, and how can we work around, especially on the flex space, just to make sure that's all. Given there's a lot of remote working happening, how can we ensure that the sensitive data is protected. So as long as we can solve these problems, I think this space will continue to grow. So it's definitely much more than just giving desks and workstations and chairs. I think we really need to look at the pain points of the clients and what they're really looking at, and really just work towards solving those issues.
I'd just like to add just a point there. I think one of the evident solutions that we are seeing, which is coming from, across the industry, is probably the tier 2, tier 3 expansion that we are seeing, because that is response to the to the hybrid work problem that we are seeing. A lot more action is going in that direction. We are running out of time, so I'm just going to open one question to all of you, because that talks about what Ekta was mentioning, what next, right? What are the disruptors in the industry that you see, and how would that change the face? I know we don't have a crystal ball to look at it and talk about it, but from your experience, from what you're seeing, what are the disruptors and how that is going to change the industry?
I think everyone's already in the last panel also. I think people spoke about tech. I think for me, the business requires 3 verticals. One is execution, second is standardization, and third is evolving. For all these 3 things, you really need technology. When you're executing any company that scales up, or any business, we're at 50 million square foot. Hopefully this number goes to about 100, 120. The ability for all of the players to execute at that scale can only be driven through technology. So I think one of the bigger changes is going to be how do people use technology to help them scale up? How do they use technology to create a standardized experience? India is a very diversified country. When you go to different cities, there's a big difference between Bombay and Pune also, right? How the markets are perceived, what is the real estate language also changes. And you guys can obviously talk about it in a better way. But for us, I think it's very important to standardize all of that across. And the third thing is to continuously evolve, right? Make sure that to what Ekta said earlier, you take a lot of feedback from your customers. Make sure that you're catering to a lot of their requirements, and then make sure over and above that, you are going a step further and giving them things that they're not expecting currently also. If you're able to deliver more, I think scaling up the business is not going to be a challenge. Demand, supply, as all of us have said, yes, there might be a little bit of a challenge of identifying supply, but I don't think supply is a big challenge. Demand is there, so it will go somewhere, right? I just think that you need to continuously evolve and make sure that the business is put in a way in which you can provide these experiences, standardize these experiences, and execute it with scale.
I partly agree with what Neetish said, although I do think on an overall level, disruption is a really bad word to use in this industry. And in the context of real estate, we might be a relatively new sub-segment of real estate, but essentially real estate's been around, it's considered one of the oldest businesses ever. I think disruption is always a bad word for us. I think there is evolution, which is why I said, taking off from what Neetish said, you will essentially look at more transparency. I think that's missing. With the CRE functions, a lot of the IPCs, there is that aspect of transparency that needs to be brought in. If you look at case studies, even today, we evaluated one of the largest portfolios in India, one of the largest occupiers has about 75,000 people, and we were able to show them concurrent data that when they're outsourcing these offices, whether to any player, not just us, you're on an average going to save about 27% over a period of 7 years. And that's really an eye-opening moment, because earlier it used to be, hey, if you're looking at for a 2-year solution, 3-year, 1 year, I have colleagues in the industry who are 3 months contracts as well, then it's an expensive proposition. But there is so much hidden inefficiency. The data transparency, transferring around costs, transferring around procurement, about managing these facilities, that's really where you're seeing a leg up. We are looking at, I would rather do a 12 to 14% CAGR over a 15-year period than the crazy 7x growth over a 2-year period. We've had examples of, companies valued at $48 billion on the back of disruption, being truly disrupted to what is sub $400 million in value. That sets this industry back far more and is far more detrimental to the growth.
I think I'll go with the word evolution too. Rather than disruption, evolution, of course. I do foresee some level of consolidation as what I'm foreseeing next. I also strongly believe that the way we are servicing our corporates that the customer is going to change. It's not going to be just a real estate number of seats requirement. Adding to what these two gentlemen had to say, that it may start with the entire consulting exercise of saying, do I need to be here? Is this the amount of space I need? And is this how I need to look at my growth? So the partnership with the occupier is going to be extended far more than where it is right now. Developers getting into flex space is one more. I don't know whether it's a disruptor, but that's something I'm seeing. There are more and more players, including developers, who feel that, I mean, I was talking to one of the developers and he said, what's the big deal? Like that? I'll fit out the whole space and chai coffee to dena hai. But that's the mindset that we need to change, that it's just not chai coffee. There's so much more to that. And that defining, and explaining that to say that it's the entire experience that corporates are looking at, which is why this industry has done so well. And it'll continue to do well. So yeah, that's from my side. Thank you.
So I've always been a bit of a dreamer when I think of things, so I'm more imaginative than. So I feel that I think the operator set is who controls this, and they will evolve a lot more. I do see India's, I think, main demand comes from GCCs and GICs. I do see they maybe will partner with Big Fours or set up their own consulting firms or work with people like us, but they'll try to give a comprehensive solution and not just workspace solutions to GCC clients, at least in India. And I think that will push their business very far. I do think that eventually they'll start buying buildings or doing jets. So we're talking about our developer relationships, amenable or not, time evolves. They will eventually do JVs and build their own buildings or buy them, and they will somehow find the capital to do it, as their business model keeps proving to investors that it works not because of COVID, it works because it works. And I also do think that there'll be a lot of integration between aggregators, both offline aggregators like ourselves and tech aggregators and operators, where eventually we'll all be able to pull out a phone on our day, phone out of the pocket, and be able to just book a seat anywhere. Somehow, we can go to a Incuspaze, Smartworks, Simpliwork, WeWork, somewhere. But this may be a 10-year after, but there would be a day like that perhaps. And so I think, yes, and mostly I do also think that they will or they should eventually set up account management teams like we have, or transaction management or CRM teams, because if you're serving 100,000 square feet for a client for 5 years, you need an account manager, and many of these clients are multi-location clients for them. So that's, of course, a lot of this may be conflicting with our specific business, but then that's what works for the industry should happen for the industry. So that's what I think.
Well, I strongly believe tech's going to be a big game changer in this, especially in the flex space. And there's lots of work which is happening in the background. I'll just take a minute. There are 3 components to, for a client, which is search, build, and manage. I think the search is happening in the retail space. Again, there's a lot of work which is happening for the managed and enterprise transactions. Building a platform where you can basically go from a search to a build. You can design your own spaces. You have the layouts, you have the BOQs, and then you can move to a manage space. You can pick up your own services in terms of what you want, manpower, consumables, whatever. So I think next few years we'll get to a level where I think it'll be very transparent and the clients will have everything in front of them. I think the only requirement they'll have from the operators is that who's going to invest in the space. So I think that's where we're reaching. But yeah, I think that's going to be a big game changer.
Thank you. I'm being told, we've really overshot time. Any questions quickly before we wind up? Anybody? Great. Thank you so much. Thank you. It is a pleasure to hear from you. Your insights have been very meaningful and valuable. And I'm sure the audience has also enjoyed your inputs. Thank you, everyone. Look forward to the next session.